Hello, my name is Lorraine Harrison. I'm with About Marketing, and I'm a small business like many of you. And we are fortunate today to help create a series of videos that's going to help all of our small business people. And I have been looking at this book that says how to stand up to the IRS. Well, it never occurred to me that I could stand up to the IRS. So we have Steve Perry, who is the author of this book with us today, and he's going to help us understand how some of this happened. I think he has 40 years of tax experience, and so he ought to know what he's doing by now. So, welcome, Steve. We're very glad to have you today. And have you been in this? Have you been doing taxes 40 years?
I have been doing taxes for 40 plus years. I've been an enrolled agent for 10 years, actively standing up to the IRS.
Wow. Now, I know that people don't want to get in trouble with the IRS. You know, we're just normal people doing our thing.
That's very true, Lorraine. I'm glad you said that because most people who have a problem with either the IRS or State Department of Revenue didn't wake up one day and say, gee, I'm going to cheat on my taxes. No, life happened. We just got out of COVID 4 years ago. Businesses struggling with every penny. How do I pay the rent? How do I pay the employees that still got? And all those other costs. And there's this faraway thing called taxes. I'll push that off. I'll get it next month. I will. I'll get it next month. Well, next month becomes next quarter, becomes next year. The next thing you know, you've got a love letter from the IRS saying, please send us $100,000.
I did get a letter one time.
Oh, really?
I did. I had paid my taxes $12 less than I was supposed to. Now that was not a bad letter.
No.
And so I wrote the check and sent it off.
And
but if it had been a big amount, I wouldn't know what to do.
There you go. One thing you have to remember: 80% of all IRS letters are benign. But as those of us who have passed 60 and then some, we watch for little circles on our skin. And if I know a circle on my skin, you can bet I'm going to run down to my doctor and say, what's that? We need to chop that out and take care of it so it doesn't spread throughout my body. IRS letters are the same way. So when you get a letter, the thing to do is first don't panic. Let me say that again.
Just seeing the envelope makes you panic.
Absolutely, absolutely. First, don't panic. Sit down, open it, and read it. Now, if you don't understand it, don't feel bad because it's written by a lawyer, and you know they go to school to learn how to write things obscurely. Then you call me. I will help you interpret it and help you find the right strategy to get past life. Because one of the things I say in the back of my book is that, yes, this is tough, but you're going to get through it, and there is life after the IRS problem. We just have to address it when it's stage 1 and not let it get to stage 4.
So you should do something to get the first letter because you're going to get another one if you don't?
The IRS is a collection agency, the biggest collection agency in the world. So if you ignore them, they will get more aggressive. So one of the first things you may get is what's called a CP 2000. What that is simply a proposal that says, Lorraine, we think you owe us $100,000.
That's when I would
Here's
on the floor. Okay.
Well, don't fall on the floor. Pick up the phone and call me because most of those letters are wrong. Yes, you owe some more tax, no doubt. But you don't owe the full amount. And I won't go into all the details. Why? But the important thing is I can help you get past that by first finding out what the real debt is. Because it's rarely what it says in CP 2000. But the one thing I want you to remember about a CP 2000, remember that number. It is a proposal. You're married. When your husband proposed to you, he probably dropped down on knees and said,
and all of that, yeah.
You had two choices. You could either say, yes, I'll marry you, or not say.
I can just say that to the IRS.
No. What you get to say to the IRS is, okay, I've got 30 days to figure out the answer it and come up with a response. Now, if you're one of those very rare cases where it's all true and you got the money in the bank, I mean, if they send you a bill for $150, don't call me, just pay it. It's not worth your trouble. So if it's a bigger number, like it has a comma in it, then it's time to sit down and work out a strategy.
Well, how do people get in a situation where they have so much? I mean, we don't try to do that.
No, you don't. The best way to answer that is with an example. I have a client. He was a truck driver. Because he fit all his time on the road, he's going home. So when he dropped off a load, he picked up a load, he was gone the next. He was on the road 300 plus days a year. Think any of those days were doing but for about 10 years, he didn't do tax return.
He didn't file for 10 years.
He did not file for 10 years. So the IRS had reports of income from other sources, the company he drove for. So they did what they call a substitute for return. Substitute for return is simply that. They take the information they know, they assume it's all income, there are no expenses, they send you a bill. They send them a bill for $100,000. Got a hold of me, and we said, okay, wait a minute. First thing we're going to do is we're going to file all those returns. We're going to file all the returns. Guess what the real tax is? How about that? Why the difference? Real simple. Truck drivers have to pay for diesel fuel, for maintenance, for wage, physical, all sorts of things. IRS doesn't know and doesn't care. When we did the returns, we report all those expenses. And, oh, okay. We agreed to taxes about $5,000, and we got one plan to get that paid off. And it wasn't that he was dodging his tax liability. He just had higher priorities. Small businesses, especially during COVID, and right after when the country was trying to get back on its feet, we're dealing with, God, I got to make payroll. Okay, I got to do this with Poland. And they're supposed to send that right out to the IRS and the state. Well, I got to pay the rent. I got these parts coming in. I got to pay for the parts or I can't.
It can't be a business if you don't pay for parts.
I'll get it next week. Next week. Next week it comes next month.
Or like your trucker 10 years later.
Exactly. That's how they get in this kind of trouble. It's not. We tend to address the hottest fire in front. Or as the old saying goes, the squeaky wheel. Squeaky wheel gets the grease. The IRS doesn't start squeaking until you owe them some serious money. Then they start squeaking. Problem is, I don't know too many small business owners who can stroke $100,000 checks. They're probably not a small business owner. I think so.
Well, what are the things that we need to be looking for? Are there surprises that we wouldn't know about?
That depends on whether or not you've got a good bookkeeper. If you have a good bookkeeper that is going over your books and paying attention, there should be no surprises. You'd get called. Lorraine, you didn't send in your quarterlies this month, this quarter. Remember we talked about
quarterly?
Yes, we have a pay-as-you-go tax system. Remember we talked, you need to send in X number of dollars, so we determined what that was each quarter. Oh yeah, I forgot. Is that a surprise? No, it wasn't the number one priority.
And I might not have the money.
Well, there's that too. You don't want to send a check into the IRS if funds aren't in the bank. They take a real big view on you bouncing the check.
So all the things that could come through somebody's life. Every time we have a major life event or taxes.
Potentially. It's not so much the change. I'll give you another example. Taxpayer's wife is fighting stage 4 cancer. The last thing on his mind was his tax bill. The last thing on his mind was filing tax return. but he's still on the taxes. What do we do? Well, in that case, we do a couple things. First, we get him on a plan for the taxes, and then we put in a request for an abatement of the penalty based on his situation. And he got it. Because, well, the IRS may be basically heartless. Congress has written into the law some heart. And under the right circumstances, I can get about any penalty abated. But circumstances have to be right.
Well, I read in your book here that one of the biggest issues where people get into trouble is they talk too much. Where did I read that? It didn't make much sense to me.
Yeah.
Don't, so if I call I get the letter, I call the IRS. First, so I don't call the IRS. That's right, I call you. But
okay, here's what happened. Everyone's seen a police show or movie. You know, and the cop will say you have the right to remain silent. Well, there's a comedy routine I saw a couple years ago that I had the right to remain silent, but I didn't have the ability. And the problem is taxpayers will be talking to a collection officer who's well trained, and they will start just spewing everything. They want to justify themselves. They're trying to get mercy. So
well, I'm embarrassed to be there if I'm behind on my taxes.
but here's what you have to remember. Anything you say to them, as the warning goes, will be used against you.
Oh, that's right. You hear that on the cop show. Right?
That's right. So, you know, the client story, I had a client, he's since retired, who I listened to on the phone when he was talking to a local business licensing brand. In the course of 20 minutes, he basically explained every crime he'd ever committed with the way he was doing.
Is your client?
Well, he was, yeah. When he got off the phone, I said, Bill, you are prevented from ever talking to a government agency again. What we know as an enrolled agent is what to tell the IRS, and even more importantly, what not to tell the IRS. Nothing says I have to give your whole life story. All I have to do is answer the question and know which questions I can say, that's not really appropriate. I'll give you an example. IRS audit. Lady loves quality shoes.
Oh, yeah.
Yeah. Well, she has the money to buy, what's the big name already? Louis Vuitton? Is that
That's one.
Okay, Louis Vuitton. And the IRS auditor, I wasn't in on this audit, said to her, go show her a nice shoe. She pops up and said, they're Louis Vuitton, and I got a dozen pair of home in the closet. Oh, exactly. She just admitted she's got a lot of assets. She's got money. Now, had I been there, what I would have said is, right, Mr. Auditor, or Ms. Auditor, we're not here to discuss shoes. We're here to discuss the finances. Let's stay on topic. That way, we don't have to tell them that, yeah, she gets a new pair of Louis Vuitton every 2 weeks.
Well, I guess the whole premise here is that when we want to deal with the IRS, we need to have a tax. No?
Not completely. Okay.
Okay.
I wrote this book, and you know, if you look at the title, it says how to stand up to the IRS. Now you think, yeah, because there's some time when hiring me would cost you more than just paying the taxes. But the reason I want you to know the more in-depth part is to recognize when it is time to call me. If you get a letter from the IRS that says you owe $1,000, and you have $1,000 or can lay your hands on it, right? Pay it. Because what you're going to pay me over the long run, and the stress on you is going to be more costly than just paying it. But if you owe $5,000 to $10,000, well, then it makes sense to call me. because that's serious money. Now, if you say to me, wait a minute, Steve, I don't have $1,000. Well, then we need to intercede somehow and find a way to do it in a way that you can afford.
Make a payment.
We can do a payment plan. We can do something called currently non-collectible. We'll talk about it later time. The point is, there's always a solution. You know, just because the IRS says you owe them money doesn't mean you do. And if you do, doesn't mean you have to write the check right now. The IRS is fully aware that you can't stroke $100,000 check. They know it's in your bank account. But we do have to deal with it. And if you don't want the IRS throwing you out of your house or seizing your bank account, you have to be working with it for a guy like me. If it's a low dollar amount, hey. But if it's got a comma in it and a 5 before the comma or better, you probably better be talking to me.
Well, something else that I was surprised about that maybe everybody doesn't know, because I didn't, was two of the items that you said get people into trouble, and one of them was the debt forgiveness. I did have a situation where I had some debt, but I don't remember that I paid taxes on it.
You may not. What happens when a debt is forgiven by a company, whether it be a mortgage company, a loan company, credit card, is if it is above a certain threshold, IRS requires them to send a 1099-C, which simply says, taxpayer, we forgave you this debt. IRS knows that. The IRS treats that as now. If it's a small amount, with a few $100s, not even around here. But let's say that for whatever reason, you had a $100,000 mortgage and the bank forgave.
I'll sign up for that.
That's a lot. Well, that is now $100,000 worth of income you have to pay tax. So when you get a 1099-C, whoever does your tax return needs that form. And if you don't get it, you're going to hear from the IRS. The IRS gets that form. That's one of the ways that people do get in trouble. They get, certain things in bankruptcy. It cause you to get a 1099-C. Most don't, but some can.
Well, the other one I was looking at was taking money out of your retirement. I mean, like I know some of them you have to pay taxes on when you take things out, but I guess you need to really check on that before you do it.
401k. Now I'm talking withdrawal, not loan. IRA, 403b. These are qualified plans. And if you don't know if your plan is qualified, talk to the person who advises you, your financial advisor. Qualified money. If you are not at least 59 and a half, you will pay a 10% penalty for taking it out with certain very narrow exceptions. And where people have gotten in trouble over the years, and those exceptions are relatively recent, if you are talking, or if you take money out, say you decide you want to buy a beach house, they need $100,000 down, and you've got that in your IRA. You pluck it out. You're going to pay taxes on it, plus 10% penalty. That's something you're $359. So when you take money out of an account, make sure you know what. Did you pay taxes on the money going in? If the answer is yes, then you're probably all right. But if it's a qualified plan, like a 401k, 403b, or an IRA, those are three biggies, it is questioned. It has to be left alone until you're 59 and a half, or you're going to pay 10% penalty.
So if you take, the reason I'm asking here, my husband is 59 and a half over, and we just took some money out, and I didn't have anything to do with it, but I don't know what question to ask. So usually our financial advisor will say, how much do you want to net? Because they're going to take out money for tax.
Sure. Okay, he's 59 and a half, which means the 10% penalty doesn't apply. He'll just pay straight income tax on it as if he earned it as a job. That is the reality.
That's the reality. Well, Steve, I know that when I read this chapter in this book, there were some things that I certainly had no idea. I did like your paragraph on don't be embarrassed, because all those things that life throws at us, we're not responsible for them a lot of times. So, and I'm assuming that the IRS really doesn't care how we got here.
Right, right, right. They take
So
care of it.
we need somebody, a professional to go back there.
And in terms of being embarrassed, I want you to think of it like a disease. If you had, remember the melanoma I talked about, or you had some other symptom of cancer, would you be embarrassed to tell your doctor you've got these symptoms? I hope not. If you would, get another doctor. These are financial problems. Now, I don't know anyone's going to put a billboard up saying I screwed up and owe the government $100,000. By the same token, you don't need to crawl under a bush. That's not going to help. We just need to address the problem.
Well, I want to read. I pulled out one or two of your testimonials, and I want to read this particular sentence that somebody said, because after looking at the book and reading these testimonials, definitely the one I would call. But this man says, "This man is a beast when it comes to helping people with their taxes." And I guess that's what we want, a beast to go up against the IRS.
Yep, sure do. Need somebody with a ramrod and spine and won't back off.
And knows what he's doing. So thank you so much, Steve. I hope that people learned as much as I did out of this first chapter. So thank you for your participation today.
Thank you.
Thanks for watching. If you found this information helpful, don't forget to like, comment, and share this video. And make sure to subscribe for more great tax tips and strategies from Steve Perry and Books, Taxes, and more. Visit our website at bookstaxesatl.com for more resources. See you in the next video.